Have you ever wondered what banks don't want you to know? There's a hidden blueprint they use to build wealth, and it's not the savings account they push on you. For centuries, the wealthy have used a specific financial strategy to grow their money safely and predictably, completely outside the stock market's ups and downs. Imagine a system where your money grows tax-free, you can borrow against it without penalty, and it provides a guaranteed legacy for your family. This isn't some new age trick. It's a time-tested method that has been the financial backbone for generations of insiders. What if you could learn this blueprint and apply it to your own life? It's simpler than you think, and it could completely change your financial future. Want to see how it's done? Smash that subscribe button, and let's unlock these secrets together. Ever wonder how people managed their money before banks and ATMs? It's a wild story. For thousands of years, the world ran on bartering. Imagine trading your chickens for a new pair of shoes. It worked, but it was complicated. What if the shoemaker didn't want chickens? So people got creative. They started using things everyone agreed had value, like cowrie shells in Africa or giant stone wheels on the island of Yap. In ancient Rome, soldiers were even paid in salt, which is where we get the word salary. Eventually, we moved on to precious metals like gold and silver. They were durable, portable, and easy to divide. People would weigh out bits of metal for every purchase. It wasn't until much later that the first banks appeared, offering a safer place to store your wealth and leading to the financial world we know today. Pretty cool, right? Thanks for watching, and don't forget to subscribe for more. Ever wondered how banks seem to create money out of thin air? It all goes back to the clever goldsmiths of the past. Imagine this. Centuries ago, people didn't want to lug heavy gold coins everywhere. So, they stored their gold with a trusted goldsmith for safekeeping. In return, they got a paper receipt. Soon, people realized these receipts were just as good as gold. They started trading the paper directly instead of the actual metal. The goldsmiths noticed that most of the gold just sat in their vaults, never touched. So, they had a brilliant and slightly risky idea. Why not lend out some of that idle gold and charge interest? This was the birth of fractional reserve banking. The goldsmiths, now early bankers, kept only a fraction of the gold in reserve and lent out the rest. This simple idea revolutionized finance and shaped the modern banking system we use today. Pretty wild, right? Follow for more money history? Ever wondered who controls the money in your pocket? It wasn't always governments or big banks. For centuries, money was just gold, silver, or whatever people agreed had value. But as economies grew, this system got chaotic. Imagine every town having its own currency, a total mess, right? This led to financial panics and instability. Enter the central bank. The first one, Sweden's Riksbank, was founded way back in 1668. The idea was simple but revolutionary. Create a single, trusted institution to manage a nation's money supply. Control interest rates and act as a lender of last resort to prevent bank collapses. From the Bank of England to the U.S. Federal Reserve, these powerful institutions were born out of crisis to bring order to the financial world. They've shaped our modern economy in ways you can't even imagine. Want to learn more about how money really works? Hit that subscribe button for more. Thanks for watching. Ever wondered why the value of your money seems to change all the time? A big part of the answer lies in a major event from 1971. For a long time, the US dollar was backed by gold. You could literally exchange your dollars for a fixed amount of gold. This was called the gold standard, and it kept currency values pretty stable. But then, President Nixon made a huge announcement. He severed the direct link between the US dollar and gold. This move created what we now know as fiat currency money that's valuable simply because the government says it is. It allowed governments more flexibility to manage their economies, like printing more money to stimulate growth. But it also opened the door to inflation and currency fluctuations. This single decision fundamentally changed how money works worldwide and still impacts your wallet today. Pretty wild, right? Don't forget to like and subscribe for more bite-sized history. Ever wonder why everyone from governments to your neighbor seems to be in debt? It's not just a personal struggle. It's actually the fuel that powers our entire modern economy. Think about it. When you take out a loan for a car or a house, you're not just getting what you want now. You're injecting money into the economy, creating demand, and helping businesses grow. This process is called credit creation. Banks don't just lend out money they already have, they create new money through loans. This new money allows for investment in big projects, like new technologies or infrastructure that we couldn't afford otherwise. It accelerates growth, funds innovation, and keeps the economic wheels turning. So while personal debt needs careful management on a larger scale, it's the very engine driving us forward. Pretty wild, right? Thanks for watching, and don't forget to subscribe for more insights. Ever felt that stomach-lurching drop when you check your bank account? Now imagine that feeling on a global scale. That's a financial crisis. It's not just numbers on a screen. It's real people, real jobs, and real savings vanishing almost overnight. From the Dutch tulip mania in the 1600s to the 2008 meltdown that many of us still remember, these economic earthquakes have shaped our world in dramatic ways. What causes them? A perfect storm of speculation, debt, and sometimes pure human greed. But here's the fascinating part. From the ashes of every crisis, new rules, new technologies, and new opportunities emerge. It's a painful, yet powerful cycle of collapse and renewal. We'll explore the biggest booms and busts in history to understand how we got here and what might be next. Subscribe to learn more about the forces that shape our financial lives. Ever wonder why it feels like we're stuck in a financial Groundhog Day? Booms, busts, bubbles. It's the same story, just with different players. Why do these cycles keep repeating? It's not just about economics. It's about human psychology. When times are good, we get optimistic, maybe a little greedy, and FOMO kicks in. We start taking bigger risks, thinking the party will never end. Then, when the market turns, fear takes over. Panic selling starts, and everyone rushes for the exits, often at the worst possible time. This swing between greed and fear is a powerful, predictable force that has driven markets for centuries. Understanding this human element is the first step to breaking the cycle for yourself and making smarter financial decisions, no matter what the market is doing. Want to dive deeper? Hit that subscribe button, and let's learn together. Ever wondered how you can send money to someone on the other side of the world in just minutes? It's all thanks to the incredible global banking network. Think of it as a massive, invisible web connecting thousands of banks across countries and continents. This network isn't just one single system. It's a complex mix of technologies and agreements. A key player is SWIFT, which acts like a secure messaging service for banks, allowing them to send payment orders safely and quickly. Then you have systems like SEPA in Europe and ACH in the US that handle domestic and regional transfers. It's this powerful combination that makes our modern financial world spin, enabling everything from international trade to you buying that cool gadget from overseas. It's truly the backbone of the global economy. Thanks for watching, and don't forget to subscribe for more insights. Ever wonder how that morning coffee you just bought is connected to the big world of banking? It's more than you think. Every time you swipe your card, you're interacting with a system shaped by banking decisions. These decisions influence everything, from the interest rates on your savings account to the mortgage for your future home. Think about it. The loan that helped your favorite local cafe get started? That was a banking decision. The credit card rewards you're saving up for a vacation. It's also a banking decision. Even the mobile app you use to check your balance is a product of your bank's choices in technology. Understanding how these financial gears turn can empower you to make smarter money moves every single day. So next time you tap to pay, remember you're a key player in a much larger financial story. Want to learn more about making your money work for you? Hit that subscribe button.